Yes, hi, good afternoon, good evening, rather, to everyone on this call. Thank you for joining. Firstly, apologies for missing our annual or monthly catch up in March, but we just thought that probably today is a much more appropriate day to do this call. It's the first day of the next financial year. So, irrespective of difficult month that I think all of us have encountered, not for reasons of our own creation. The first day of a financial year always brings with it some elements of hope and confidence. So, just wanted to start by wishing everybody all the very best for the financial year 2027. Uh, we are going to follow a slightly different format this time around, not in terms of how we structure it, but actually in terms of what I would prefer we spend more time on, because I think they often say कि ये खराब times में people tend to hide, and it becomes therefore much more difficult for advisors and distributors to reach out to customers because the AMC guys are lesser to be found sometimes. So what I'd prefer to do is firstly keep my comments to a minimum, uh, give the maximum airtime to Krishna, who I requested to not just look at this as a market outlook, but perhaps share his experience and wisdom with us in terms of how he sees this playing out and perhaps what one should be doing. And I would dearly hope that we spend more time on Q&A, because while we may believe that some of these things we are saying are important and they are useful to you, I think it is all of you who are on the ground, who are meeting with investors, that have many questions that need to be continuously answered. So I would encourage you today, particularly, to use the Q&A portion as liberally as you would want. Since we don't have Rahul on the call, he's traveling. Uh, just a very quick perspective on fixed income. You would know Rahul has made the point for a while that given multiple things, my calls on duration will not make sense. It is better to be conservative. That's a stance that obviously has played out for us very nicely in the last 2 3 months, and even during these challenging times, we continue to maintain that stance. When there is uncertainty and challenges, it is better to be safe than sorry. So on fixed income, we continue to maintain, I would say, a relatively conservative stance on duration, and we will make the right choices in terms of becoming more aggressive when we think the prices are significantly in their favor. So that's about it. The second message I would just give you, because sometimes I try to use this to just share with the community lessons or insights that I have gained from other MFDs that I have met, right? So, one of the things that I have seen a bunch of MFDs do in particular is they're not necessarily attempting beyond a point to fight the client wanting to take money out or whatever, but they're making sure that the client does not redeem but instead makes a switch. Because at the end of the day, we are not living in a world right now which is the end is near. We are living in a world where people, whether you like it or not, are wanting to be cautious, wanting to time things perfectly, etc. We can go into discussions on how that doesn't help and doesn't work in the long term, but these are not necessarily times when one has only common sense logical discussions. And so therefore, one learning or message I can give you from some of the practitioners within the community is that clients are certainly not minding that a switch is being shown as a choice and an option. The argument being made to me is that for every 10 clients who wanted to redeem, I push them and show them a low duration fund or a short term bond fund, etc., saying that, sir, there is a predictable, reasonable return. We might as well wait here and decide what we need to do next. It is working out for them 90% of the time. So I just thought I would leave you with that particular thought. And with that, I'll turn it over to Krishna because, like I said, the greatest value right now is to hear from people who are actually playing the game and understanding what their thoughts are. And then, like I said, we are happy to take a question and answer session that I would again urge you to keep as vibrant and broad as possible. So, with that, over to you, Krishna.
Yeah, hi. Good afternoon, everyone. And yes, Anthony mentioned clearly a good day to connect actually is the beginning of the year. We started financial year FY27. And to that extent, yeah, let's hope it's a good year for all of us. And starting with Indian markets, maybe starting with the global economy first, Indian markets and our funds together. So I think that's broadly, I'll possibly start with some thoughts on what uh, has happened in the markets in terms of last 1 month or honestly a lot of the things have happened where the entire discussion of the previous 11 month could have one maybe have gone for relatively a different outcome. And that's sometimes the beauty of markets where we are trained or we are taught at various points of time that there are too many things matters in the market. It's no more about a single stock specific bottom up approach which works. It's not about always a top down macro which works, but limited to only your country or your region, or sometimes even the global markets, global economy matters. So this is a nice a recap of what possibly has happened. So I'll put it this way. We are in a situation right now where I just want to confirm, is the slide being visible?
Yeah, Krishna, it is visible. It is not, suddenly it is not visible. It was visible for
Okay.
to a second back, but the slideshow was not visible. I can put it on and I'll confirm.
Yeah. Is it better?
Yeah, but can you just put the slideshow on?
Sure.
Yes, it's on. And Krishna, I already have one request if you could intersperse your delivery in both English and Hindi.
Yeah, we'll definitely do that. So yeah, this market basically teaches us, that it's not a company specific which always matters or a country specific matters, or it's a combination. World markets may you need little bit of stock specific reactions, earning trajectory, valuation, re-rating, capturing, management actions, etc. World market may also matters, equity market may also matters is what is happening to our country, what a particular country is thinking, what is the scheme for growth, is it PLI, is it GST cut, or is it something else in terms of relative priority of any country, and partly what happens to us because of something happening wrong in other part of the world where possibly as बोलते हैं ना कि इसमें तो हमारा कुछ कनेक्शन भी नहीं है, but yeah, still sometimes something comes out of nowhere to impact the the country from either a physical angle or economic angle, and the financial markets uh, kind of thing. So just quick recap of India structural growth thesis broadly remains strong. Narrative is intact. Like 7% potential growth rate is what all of us possibly want. Seven real and 3.5, four nominal. Inflation means around anything between 10 to 11, nominal GDP, and that can do wonders. Last 5-7 years, pretty good. Policy discipline is in place. Fiscal consolidation has happened, and public capex happening. Consumption tailwinds are strong. Tax rationalization, etc., is helping. I think ट्रेड एग्रीमेंट टू माई माइंड सबसे बड़ा जो चेंजेस हुआ है इंडिया में इन लास्ट 3 months अपार्ट फ्रॉम दिस वॉर रिलेटेड एंगल एक्चुअली द ट्रेड एग्रीमेंट in this 3-4 month period. We signed agreement with US, UK, EU, maybe New Zealand, maybe a lot of countries in Middle East, and possibly more trade agreements are on the way. तो सबसे बड़ा एडवांटेज क्या है ट्रेड एग्रीमेंट का? ट्रेड एग्रीमेंट के दो एडवांटेज है. नंबर वन, our country can freely trade with other countries in terms of products. So one is our हमारे देश में जो प्रोडक्ट्स इंपोर्टेड आते हैं दैट becomes quite cheap because import duty is cut. Second, our companies, which are capable of producing right set of products, they get an advantage to serve customer in other countries. So it actually expands the trade basket. More profitable players emerge because if you are competitive, if you are able to serve customer, you make money. So सबसे बड़ी advantage है जो trade agreement की क्या है कि unlike in the past 40-50 years, ये लास्ट 3-6 महीने के जो भी एग्रीमेंट्स है उसमें वी हैव साइंड एग्रीमेंट विद कंट्रीज विच आर फार मोर रिचर देन अस. India's, this per capita GDP is just below $3,000. लेकिन जो मेजोरिटी कंट्रीज से हमने जीडीपी ये ट्रेड एग्रीमेंट साइन किए हैं, देयर द पर कैपिटा जीडीपी इज 60,000, 80,000, 100,000 US dollars. So the advantage क्या है कि our companies get a chance to serve a customer in a global economy, which is a rich economy. And when you move to product, profile to a rich customer base, you're if you're able to get it right in terms of premiumization, product quality, etc., you make a lot of money. So exposure to new economies, new set of customers, and hopefully richer, which means our product basket increases. Parallelly, when those products are anyway imported into India and consumed by rich Indians, if the same product is available cheaper because of FTA, it also benefits Indian customer. It's a very, very unique, thing when you sign a free trade agreement with a country which is much richer than ours, and that benefit is likely to play out. Government is doing the right things of manufacturing push, etc., and everything broadly was robust till we went into this geopolitical flare up where, like I said, India broadly had no role. So what's changed or what is the risk right now? Conflicts and short-term macro risk, primarily through the energy markets. Energy dependency is pretty high. Not only for India, there are too many countries. I am sure all of you would have seen कि जैसे इंडिया है वैसे ही many countries in Asia, maybe more like South Asia, Southeast Asia combination, maybe something as far as Australia, Africa. इतने सारे countries है कि जहाँ पे energy dependency is high. Even if you follow the world map and world geography and geology, there are some countries in the world which are having rich amount of resource of oil, etc., and that's basically Middle East primarily, but equally US, Russia are capable because of their geography. They were born with that. We can't change that, but yes, those countries are big exporters of energy markets, and all the importers are possibly right now in little bit of a troubled spot, struggling. Maybe some of them, depending on how long the war continues, it may really be a struggle. Let's see how it goes. I mean, I have some slides to possibly highlight the challenges and maybe some sort of solutions, some medium term, some quick, and some real long term. Higher crude price and potential gas supply disruption can reintroduce cost pressure for us. Higher inflationary risk. By the way, जो भी ये slide में लिखा है ना on the geopolitical risk, trust me, is applicable to almost every other economy which is of import dependency. It is not only India. It includes Japan. It includes Australia. It includes Singapore. It includes Vietnam. It includes Korea, Taiwan. You name the economy. I'm sure आप लोग सबने भी पढ़ा रहेगा what all side effects of some of these war related issues has happened. So let's look at what has happened. This is what happened in the war. Almost every stock market in the world is down. Maybe you know Saudi stock market is up, and that's partly because the largest player there is Aramco. Aramco is, as you say, as we all know, it's a oil producing country, so a company. So there, that maybe that single stock Aramco would have done wonders to Saudi stock market, because oil price are up what they are. But look at it this way, we are somewhere in that 11.3% range, yeah, for Nifty. And yeah, there are countries having done 7-8% down, or countries with 15% down. It's a combination, and that's the thing. Global markets, as I mentioned in the earlier slide, what is challenge for India is challenge for too many countries in the world. So to that extent, it's either one way to think, it's a hum akele nahi hai. There are too many people who are struggling, and that's one hope that solutions do come in pretty fast when there are too many players involved. That's one way to look at it. Other way to look at it is a relative scale, which countries are possibly having their own set of escape routes, or slightly better way of dealing with this challenge. I have a couple of thoughts there. Let's look at global energy dependency. This is about oil market. 31% of oil comes from Middle East, and maybe 29% North America, and that CIS is possibly mainly Russia. But yeah, that's a broad mix of how. So the conflict in Middle East has basically hurt, out of this 31, maybe two-third of it, around 18-19% is hurt. The remaining 12% comes from some other route. So not really so much, let's say, worrisome. Other side of global energy dependency is actually the LNG. This is country specific. How each of these countries have their own share of LNG import basket. If I just look at this particular slide, chapter rather, in a way, yes, LNG wise, we are more dependent on Middle East purchase. At the same time, it also tells us that there are other geographies available where India can diversify. See, right now we are in a situation where almost every economy in the world is trying to settle. Every political system, every ruling party is trying to figure out how to keep the economy currently running. In this kind of crisis, there are two approaches possible. One approach is, till the time we are able to afford, let's pay a higher price, but let's keep the economy running, because the side effects of economy being closed down, as we all had seen in the COVID times, were pretty severe, pretty sharp. So one approach is, yes, let me buy at whatever price available, and that's what a lot of countries are doing. Luckily, the LNG chart reflects clearly that something is available. It is just a question of diversifying your source of purchase, rather than you know it simply being not available. Unfortunately, same option is not there in oil, where if Middle East is selling 31%, possibility of that patch of Strait of Hormuz, which has around 18-19% of world production coming up, is slightly difficult. So that's global energy dependency, LNG and oil combination. Look at energy dependency from other side, which is how some of these countries, this is essentially Asia, China, India, Japan, how our own energy mix is coming in. When I look at energy mix for this purpose, this chart is defining energy as everything: coal, gas, hydro, nuclear, renewable, etc. Which is a serious bright spot for India, which says that India has a pretty high degree of dependency coming from coal. Coal, unlike oil and gas, is a resource available very abundant in India. So we can keep on, extracting coal from ground and start keep on using it for a longer term. That's really the savior in terms of the case. Basic thing called electricity, etc. Is pretty much easily available. Second part of the challenge of energy dependency possibly is how the urea market or the fertilizer market is going to play out, because some of these countries in Middle East, because of this natural gas availability, have a high capability of selling, fertilizer as a product, and some of these products are hardcore, requirement for any cropping pattern anywhere in the world, whether it's India, whether it's Europe, whether it's South Africa or African continent or Australia. They all need some of those products, and some shortage somewhere is possibly going to hurt. Luckily, fertilizer has at least little bit of a longer pipeline, little bit of a planning happens in a better way, unlike oil and gas, where the see the challenge in oil and gas में क्या है कि last 15-20-25 साल से this system is going on, where perfect supply chain dynamics, just in time inventory management, very efficient shipping lines are playing out. Like for example, अगर Middle East Strait of Hormuz belt से कोई भी अगर ship India. Now, if it typically takes, let's say, 5 days to come to India, that is a very well established principle, so that the actual inventory storage can be pretty less, because the throughput of the system was so efficient that nobody really felt like, storing things. In a fertilizer, because of seasonality pattern, uh, is always a storage which is available. So that's a good news again, that basic storage for this year should be available in quite a few countries in the world. But unlike oil and gas, which is more like just in time, etc., that's a challenge there. So what's the challenge on this Strait of Hormuz thing? This chart tells us how many ships and tankers and within tankers, LPG, LNG, oil tankers, etc., have we able to pass through. So if you look at this, the war started somewhere on, the maybe the fourth day on the chart, which is at 28th Feb, and you see the sharp drop in the number of vessels, which has happened. And from that day onwards, it's been really trickling down to too fewer numbers. And based on what all we read from media and from various countries, very few countries are allowed. Luckily, again, India is one of those countries where our ability to access, our shipments of oil or LPG, LNG, etc., from this geography is still intact till we speak. Yeah, it's geopolitics right now. We can't really think uh, whether it's sustainable, or nobody can guarantee. But yeah, touch wood, we've been really in a way lucky to keep on having our own share of shipments do coming through, and which is going to help, which is right now helping us while we speak. See, one way to look at this chart really is that if the average shipment time is, let's say, 6 days to India, let's say, or maybe 20 days for somebody in Southeast Asia, or 30 days for somebody, far side, something like Australia. Any ship which would have left after, 28th of Feb, there are very few ships, but even those ships would have by now really reached simply too many, destinations, and they would have already, emptied up in terms of the contents. After that, the refilling is pretty low. So if you look at, the number of oil tankers floating on that last first 3 4 days, of this chart versus what's happening in the last 7 8 days or 10 days, the sheer number of oil tankers having passed through in those early period, actually the pre-war period, would have been already used up somewhere in the system, and that's what the shortage is possibly is discussed. The way to look at this war really, is right now two things on energy side. One is the availability of energy, other is the price of energy. Right now, yes, a lot of focus in the market is on the price of energy, and that's why, what happens to the Brent crude or WTI crude keeps on changing reactions for people in the market on a live basis. But the reality is that at some point, you might reach a situation where price may be okay, but availability itself can be challenged, because the number of, just to give a color, approximately 105 million barrels of oil is consumed, in the world market on a daily basis. Out of 105, around 1820 comes in from this Middle East, and even if that 1820 comes down to 10, still we're talking about something like 8 10% drop. Luckily, a current drop is more of a logistic challenge, which means that the day the Strait of Hormuz is opened up, a lot of things will be streamlined. One slightly tougher scenario, which none of us have an answer, is that how much of oil infrastructure has been damaged, if at all damaged, where the repairing time or a reconstruction time might take 3 months, 6 months. And we know that something on LNG has happened. Qatar has put some sort of a force measure for some portion of LNG. Luckily, LNG has a lot of replacement available in the world at a price. Oil is possibly not so much abundant to take care of, those things. But as I said, no need to really that way, even panic, because we don't have adequate information about damage to any of the oil producing facilities. So that's just more of, thinking through about what possibly, can be a way out. One of the scenario can be that as both Iran and America end up talking about some sort of settlement, some sort of a peace, we can very well have a situation that in next 6 months, we actually go back to what the situation was in January, which means uh, oil is available, and maybe price might be slightly higher, or but it's available. That's one scenario. Other scenario really is, is a lot of damages happened, which means 10% odd of world oil may not be easily available for next 1 year odd period. That can be a challenging situation, and some sort of a in between scenario is what possibly we should build in. Really, is that there is some damage, some destruction of supply, but that's more like, low single digit, which means 3-4% kind of damage possibly can happen. That damage gets reflected in a higher price point of oil, but at the same time, just about 4% change in, supply can be met by some other alternate resource available. There are, countries and companies capable of switching between oil to LNG, etc., or maybe, oil can be replaced by thermal for some time, coal can be used. In that, base scenario, where the supply destruction is manageable, maybe price is the only variable, and hopefully that should be the scenario we should be, let's say, expecting. Yeah, the best scenario can be everything back to normal, and not only the availability in order, but even price under control. Yeah, it's right now difficult to put a probability of which of the three is higher or lower, but these are the three scenarios, possibly I can think of. Talking about coal, and this is chart again, is in a way partly a repeat of what earlier chart showed, but this is about electricity generation by source. So that's, the first figure says India 73% is generated by coal, and remaining is by other source, natural gas and oil, etc. While if you look at some other countries, the coal usage is pretty low, and much higher is natural gas, etc. US happens to be lucky right now in this particular figure, where US has a very big amount of electricity generation by natural gas, but they have their own natural gas availability. They are the biggest producer in a way of their own requirements, so they are net exporters, so they are safest in the piece. Other troubled part can be, the global average itself is poor, and maybe Europe has its own higher dependency of natural gas for electricity, but unfortunately they don't produce natural gas so much themselves. The figure on the right, something similar, but yeah, it just splits more into the Asia base rather than talking about global only. So that's again the extreme right, column bar suggests India, with orange being the coal, and pretty nice availability of coal availability, which creates electricity generation for India. So on a relative basis, clearly India is better off vis-a-vis how some of the other countries have their own, challenges, is what one message out here. LPG, slightly heavy chart, but basically, let's say five charts out here. First says, India imports something like 53% of LPG from Strait of Hormuz. So that's a challenge, and a lot of effort from political, perspective has gone into ensuring the LPG on track. Second picture suggests that 89% of LPG is used by Indian households, which means any supply disruption from this LPG can really create a challenge for LPG consumption at home. And if LPG is mainly used for cooking, then it's a challenge. So look at the fourth slide, which is, just talks about household split across fuel type. It says, in the rural India, just too many people are using, LPG. So that's where the first focus from government has been on ensuring LPG supply. And figure on the bottom left says how LPG allocation to commercial sector has gone up over time. As government has started getting a nice hang or nice control over the supply coming up in future, they've actually increased commercial sector. Earlier, if you see, look, 8th March, maybe the number was pretty low, and that basically meant that, a lot of effort went only into households. But later on, the households remaining same, the commercial sector allocation goes up, which means economy is broadly accepting that government is accepting that LPG availability is not going to be a big challenge in the near term. Structurally, we need some solution. Possibly, we will talk about it. That's about LNG. Again, broad message is similar. India is just among the many countries which are impacted. We are not the only one. Yes, sitting in India, RBCR markets, basically falling, and we've seen one of the earlier slide, maybe for our 11% odd fall, there were quite a few countries in a similar, range in terms of current equity market reaction. That's a way to, read. It's more like, uh, uh, a way to look at markets, that markets are interlinked. There are offsetting players like FIIs who look at some of these macro variables much on a granular way, and they try to optimize their money movement to see which countries are relatively better off. Right now, it looks like a lot of the countries are in a similar, bucket in terms of how energy dependency is played out. Yeah, there are hopefully some solutions. So this is one of the thing which is come up as an option, that for there are too many user sectors like fertilizer, power generation, etc. Can at some stage they be replaced with some alternative energy usage. I'm not really sharing the timeline, because in some cases timeline can be pretty small, can be pretty long in terms of the gestation period. But yeah, the idea really is that there are options available which can create some sort of an alternate available. So that's a thought. There are some solutions which are immediate, which means you look for availability from alternate source, in terms of try to change the supplier country, or sometimes you do a relative prioritization among users, saying some people will not get easily, some people will get it easily, kind of combination. But long term solution is some alternate, you need to change the fuel options, and at the same time try to have some alternate sourcing logistic combination. That's a natural gas option. Just from a rupee value perspective, we thought let's look at India's total import bill. We paid $157 billion in FY 2024, split between crude oil, LNG, and LPG. That number became $164 billion in FY 25, and for 11 month FY 26, the number is actually 133 billion. So look, depending on what actually would have happened in FY in March 26, our import bill in FY 26 is actually lower than FY 25. Is one assumption I can easily draw, because uh, single month we wouldn't have paid up so much the differential between 11 month and 12 month of last year. But yeah, the challenge is, what's the big picture maybe here is that, assuming this 132 billion ends up at $150 billion, we be talking about something which is $150 billion worth of average import bill of India from energy angle, possibly can go up by 20, 30, 40%, depending on that how those scenarios play out of reasonable normalcy versus some shortage at a higher price combination. And that's a number which yeah, not only me but too many people are waiting that clarity, which possibly is going to come in next couple of weeks, as these countries in the Middle East start sharing their information about extent of damage, etc. uh, this is an old saying, history may not repeat, but it always rhymes. So this is a nice quote saying, those who don't study history are doomed to repeat. Maybe at times, if you study, you might still be fooled by people who don't study. So that's a message, that too many people in markets playing out their own understanding of markets. So there are some people who might have seen or aware of the way the environment played out. And trust me, in the past, while you Anthony did mention about some of us would have seen markets, but I think, to be fair to this current scenario, whatever we've seen really, is always an excess of demand over supply kind of environment, where price does move up because there are more demand. Today, for the first time in last 30 years or so period, we're talking about a scenario where demand remaining similar, but it is overshooting supply because supply is going to be challenged. And each of the case, there are some differences, because whenever demand is strong and supply is feeling short, price pattern can price of the product can help somewhere. But in a situation where supply is short, it's a little bit difficult to really visualize how can price help when there's a shortage. So the worst outcome for economy can really be a shortage economy of energy, created because of this war and maybe the destruction, as I said, not yet fully known information. Come to our market specifically, yeah, look at last 30-year history of Nifty. There are enough fears, which a little bit of a positive, negative, let's say combination. And all I can say is that yes, there happens to be couple of good years and then one bad year. That's for broadly line says for every two or three green indicators, the next one happens to be a red, and again you back to green. So that's a long-term story of India, which says that yes, there are the markets conceptually are for growth. Those disruptions can come, and in each of these years where the year was red, or the intensity could have been created by some variable which is partly unknown. So, for example, that 26% down could have been the COVID year. The 36% down was possibly the GFC year, and maybe 4.9 was the Y2K crash and maybe that World Trade Center angle. But the reality is, those sharp negatives have been recovered by the economy. That's a broad nature of this entire piece called global economy. We keep on doing well. There are occasional times where such sharp corrections happen, and those corrections invariably are driven by 2 3 years of excess euphoria, which is the market cycle. Which market cycle says that when people make money, they become slightly more confident to put much higher money. At times they resort to leverage, and somewhere in those high leverage cycle, market does end up having some unexpected external shock, which in this case happens to be, let's say, the war. Maybe 6 years back, exactly in similar in March 2020, I would have said the external shock really is the COVID. But external shock combined with over bullish market environment possibly can create this kind of panic. And but as I said, that does get reversed, has got reversed, and I do have reasonable reasons to believe that that overall economic growth potential finally overtakes this thing. So that's one thing. Another lot of debate in the Indian markets have been in the media, especially about rupee, and I just thought it makes sense to highlight one specific feature of Indian markets and currency. So the red line suggests how Nifty has moved over last maybe 30-year period, FY96 onwards, all the way till maybe yesterday. Something like 985 was a index level, Nifty level in that year, and right now it's 22,330. Night means as of yesterday. Yeah, today we had a great day in markets, courtesy what Iran spoke yesterday evening. Let's await what the US is going to speak. So I'm sure all of us are aware. Donald Trump is going to give his version of his announcement. So in uh, midnight India time tonight somewhere. So hopefully by tomorrow morning when Indian markets start, we'll have some clarity about what US is thinking about their own action plan to whatever Iran proposal has been. Look at the green line. Green line actually reflects USD INR. For some of us, on this webinar, we may be able to reflect and relate that, yeah, there was a time, rupee was at 34 rupees to a dollar. And that 34 is right now maybe 94 or to a dollar. Uh, One way to look at this chart really is that Indian economic has significantly seen a depreciation of rupee over last 30-year period. So in a way, I'll say this is part and parcel of any growth economy, which is having a positive demography. Typically, a positive demography really means that you are slightly more on consumption side. If we are emerging market economy with a lower per capita, which also means that average on an average it's a supply constrained economy, which means inflation is typically higher. If I look at that piece of a positive demography and a higher inflation combination, this kind of rupee depreciation is to be expected. If you look at the entire point to point, on an average, India goes through this 3.5%, 4% kind of depreciation range on the CAGR basis. And as we all know, all these rules of CAGR in financial markets are always point to point and never linear in terms of each year is never going to be same 3.5, 4. We're seeing some weakness. We're seeing some weakness recently in last 1 month odd period, especially more so. But at the same time, look at a lot of other currencies in the world possibly shows a similar impact, if not verbatim same. And that's what maybe the global linkage to this energy dependency is. Global linkage to financial market is too much interdependence on energy and of beneficiaries emerge, because any country which is serving global markets start making more profits because they actually are able to realize more money for their US dollar sales. Any company which is having a import competition in India starts making more money because their so-called competitiveness increases vis-a-vis the import content. And for those country companies which are importing, they do undergo some sort of a pain for that particular period, but over time either the productivity picks up or those price points of those products does get influence on the way down, and that adjusted. So over this cycle, if you look at it, quite a few Indian companies would have recorded profits. Indian GDP has grown materially over the cycle, and So to that extent, be aware that rupee has an issue right now. We can't deny that's more of a immediate need for rupee dollar. Just to give a perspective, Indian foreign exchange reserves have been broadly averaging around 11, 10 to 12 months of import cover on an average. Now, if I build the current oil price, that import cover ratio suddenly will drop from, let's say, that range of 10 to 12 to suddenly to 6, 8. But yeah, the belief really is that this kind of oil prices scenario is not something likely to stay, and that's why maybe a immediate panic possibly is there as FI flows are there. By the way, FI outflows are there in almost every geography. It's not only India; it's even Korea, even Taiwan are having their own share of FII redemptions or reduction of money, and that's an angle which I think I have a next possibly slide something. Yeah, so that's the one takeaway out here is energy crises are impacting majority countries on both side volume and price. Policy action almost everywhere is simple, try alternate fuels and alternate sources of fuel. Impact possibly is weaker currency right now, and as I mentioned, too many countries having that impact in the absolute near term. And there's going to be a higher consumer inflation everywhere because finally you paying higher price for energy. India, like all other countries, very similar impact. Slightly better position because of coal dependency is good for energy mix. Yeah, this clearly means all those efforts of last 10 years on ESG front might take a backseat, but when there is emergency in terms of availability, I'm sure some of those actions can be a part and parcel of the game. We have access to Russian imports right now, and our geographical advantage of being closer to Middle East post normalcy. This is a very powerful advantage because if a ship is going to take, let's say, 7 days to reach India versus 15 days to reach somewhere in Southeast Asia, or maybe 30 days to reach Australia, you understand, the same ship can actually do four churns within by the time it possibly can come back from some other geography. So I think those advantages, which means the throughput possibility for India is much higher, is how I'll read into that. From a market side, yeah, bond yields are rising across the world. That's an in a way outcome of this inflation expectation going up. Outflows are happening across equity as an asset class. That's one risk. That one risk really is the bond yields are higher than the equity yields in USA. It's a very it's a unique thing. Maybe for last 10 years or so, in our all we've seen those times of zero interest rates or possibly very low interest rates, including times where interest was negative in Europe. When rates are so low, even if equity yields are just 3%, 4%, it makes sense to say let's be in equity. But when the competing bond yields are maybe as high as 4.5 or 5, depending on whether you want to compare with a 10-year or a 30-year bond as a proxy to equity markets, it might just create some sort of a asset allocation review by global investors, especially pension funds kind of players who says that if my bond yields are higher than equity yields, can I reduce some money from equity into bond? So that's one thing which has to watch out as a global risk. And second risk globally is actually US credit markets. US credit markets, quite a few articles have appeared in last 45 days about some private credit funds having their own redemption challenges. For some of us in India, we've seen this situation in our own markets where some funds were basically not able to redeem money at a point of time. Over time, those money was redeemed, but the kind of negativity which was got created for those points of time is well known. So something similar can happen to US credit market issues. One last piece on this thing is actually gold and silver. The immediate reaction has been down. It's in a way, intuitively it looks difficult to accept that why should in a war scenario gold and silver come down. But if you analyze little bit in line with some of the past behaviors, and one very nice video, if anybody is interested in for a more detailed conversation, was done by one of the greatest portfolio manager, Stanley Druckenmiller. It's available on YouTube. It's just 2 or 3 days old. Why he's actually explaining what has gone wrong with gold and silver in the last 1 month of war situation, why he thinks it can possibly reverse because of his understanding of gold and silver as a financial assets in this environment. So that's I think mainly from my end. I have some thoughts on how yeah, let's look at valuations. Basically, let's say three pictures. One on the right says how Nifty 12-month rolling forward earning multiples we basically come down in that less than one time standard deviation, which is a good sign, good entry point again conceptually. And the other two pictures talk about how Nifty valuations are stacked vis-a-vis the mid cap and small cap. The way to look at the gap between that black line and the red line, more the compression, it makes sense to start thinking that the mid and small is better than Nifty or not. Sometimes we end up deciding based on this. Lesser the gap, it means possibly the relative valuation things are being adjusted towards small and mid. So where right now things are today, I think all the three asset classes from a equity market angle, which is large cap, mid cap, small cap, all three are going to have comfort. From an investor perspective, if I look at unfortunately also, the flows matters also to valuation. So the challenge really is that for a large cap buyers, portfolio mindset, while valuations does sound pretty good, the challenge can be that if there is more FII selling, those selling can come in morely into large caps. While if it's a mid and small, honestly, domestic investor participation has been quite healthy, and that does remain good. So it's actually a situation where if one is worried from a pure flow or not, if you look at fundamentally, all three looks pretty interesting space, and yeah, one can afford to possibly timing wise wait, because you- well invested is one answer. SIP anyway continues. For a lump sum, maybe one can just wait for some more clarity if at all one needs. But otherwise, I think valuation wise, pretty comfortable. And yeah, sector wise, financials slightly selective vis-a-vis what we would have been 1 year, 1 month back, because a month back the interest rate view was not so negative, which means NBFCs were a relevant part of portfolios. But now, the reasons to think that in this kind of inflationary environmental, further, monetary easing from RBI side, or even from a financial market side, is looks difficult. Because suddenly, the credit requirement of the system will go up because of the higher price points of oil and energy. So to an extent, funding cost issue can make NBFC a little bit, lesser preferred. So be slightly more selective. IT can be near-term benefit of depreciation, despite whatever we read on, AI as a fear. Consumption can take a little bit of a backseat, partly because of higher price points, etc. Oil and gas commodities have their own, so-called positive outlook for some of those players. Cap goods, long-term positive, near-term, how much capex cycle, if at all, gets deferred or postponed. But yeah, Middle East rebuilding can be pretty big, and especially for some companies in India, especially Larsen, which is a relevant player there. Healthcare least impacted from current disruption, and partly, the answer came today in the markets where healthcare happened to be one of the worst performing sectors, because it was possibly the best performing last month. So those kind of short term aberrations in markets are going to happen. Those aberrations are a function of how market is positioning itself in terms of relative winners and losers. Unfortunately for us, the news flow is pretty sharp. News flow is so dominating the market moods right now, that one tweet by somebody somewhere, one news flow somebody somewhere, and market does change pretty sharply. So the pharma or healthcare sector is a classic example of how things have played out in last 1 month versus one single day, just because some announcement happened yesterday evening from Iran side that they willing to come at two peace, but with their own set of terms and conditions. Let's see how it plays out. I think that's mainly from my end. Happy to take questions, or any questions between myself and Anthony.
Yeah. Thank you, Krishna. Yeah, so thank you. We have quite a number of questions. Let me flag off some of the questions. I think Arya requested the name of the person who spoke on gold. Arya, I've responded to everyone in the chat window, but I'm just repeating it. His name is Stanley Druckenmiller, right,
Yeah.
Krishna?
Yes.
And I would just add my two paisa. Sometimes listening to some of these podcasts, including people like Ken Griffin, Stanley Druckenmiller, these are all just useful learning, etc. So maybe if I can give you guys a tip, the next time you're going to meet a client, maybe instead of reading something, this is a good habit to pick up. There are some very interesting podcasts out there. question. Let me. There are a couple of questions on fixed income. So, Krishna, if you're okay with that, let me just close those out. Ankit's asking about monetary policy, any rate cut. Suraj also kind of asked about that. Ankit, our view has been that given the rupee dollar right now, uh, and potentially the inflation risk, because obviously of oil prices, LPG, LNG, etc. Uh, our view is that there will be a pause in the upcoming policy. I will also share, मेरे हिसाब से अगर आपने मार्केट पार्टिसिपेंट्स को फेब्रुवरी में पूछा होगा कि आपको लगता है नेक्स्ट पॉलिसी में रेट कट होगा, आई वुड से 60-70% वुड हैव सेड हाँ होगा. But if you were to make a check with market participants today, मेरे हिसाब से 60 to 70% people will be expecting a pause. तो पॉइंट रीजन आई एम गिविंग यू दिस कॉन्टेक्स्ट इसकी ऐसा नहीं है कि मार्केट या रेट्स वापस बढ़ेगा, 10 ईयर बढ़ेगा बिकॉज आरबीआई ने कट नहीं किया. इट्स नाउ स्टार्टिंग टू बिकम एन एक्सपेक्टेशन that likely that there will be a pause because of the currency pressure, and potentially you don't know कि inflation का क्या impact होगा. So that's on the interest rate part. uh, it's The question is, given the current scenario of lower valuations and volatility, is it a good time to put lump sum money if you have a horizon of more than 3 years? Again, Krishna and I know are going to say yes, because that's what we are doing personally. But important thing, Eknath ji, is you have to have that emotional maturity to say, बॉस अगले 3 महीने में पॉसिबल ये भी होगा कि 5-10% का लॉस होगा इमीडिएट फर्स्ट 3 मंथ्स में. बट आई नो फ्रॉम माई एक्सपीरियंस, एंड आई नो कृष्णा यू कैन ऐड, कि अगर आप वो 5-10% की फर्दर लॉस के कारण आप नहीं डालते हो, प्रिटी श्योर कि 6 महीने के बाद, 1 साल के बाद आप साइड लाइन्स पे ही होंगे. So if somebody has money for long term, I would be somebody who will start putting in money. अभी lump sum, I would say, and somebody else has asked question कि अभी ये मार्केट में क्या SIP STP करना चाहिए. देखिए, SIP का रेलेवेंस मेरे ऑनेस्टली नहीं है, बिकॉज अगर मेरे पास 10 लाख रुपया इन्वेस्ट करने के लिए, और अगर उसके लिए मैंने 25,000 या 50,000 का SIP मैंने चालू कर दिया, तो मुझे 2 साल लगेगा टू गेट रीड ऑफ द 10 लाख रुपीज, राइट? सो आई थिंक द क्वेश्चन इज ओनली अबाउट, should I invest lump sum or should I perhaps do an STP over the next 3 months?
Yeah.
Because once you say STP over 6 months, बस वो वॉर मोस्ट लाइकली खत्म होगा, या जो भी मार्केट का जो स्थिति होगा, it's not going to play out over 6 months. So our answer would be, you know, if you have money for 3 months, sorry, if you have money for 3 years or 5 years, investing lump sum, as long as you have the courage to stand against any 5-10% cut that may happen, or do an STP over.
Yeah, just ignore. Just
Yeah,
ignore the next 3 month performance outcome of that money in terms of NAV movement.
yeah.
So a lot of times what happens ना कि investment horizon सबका 3 साल रहता है, I agree. The challenge is evaluation time. वो नेक्स्ट 2 महीने के बाद उसका पोर्टफोलियो वैल्यू देखना नहीं देखना इज रियल डिसिप्लिन विच माइट बी रिक्वायर्ड. बट as Anthony said clearly, one can also think of it as a STP in 3 months or 2 months or even 1 month, let's say. Every day you put money for 20 days in 1 month, and the entire money gets technically invested. So do something like that rather than a pure play single day lump sum. Yeah, but have a very short frequency instead of lump sum.
Question from Rachit, your view on small and mid cap funds. And there is a question obviously on lump sum and SIPs. I think that we've answered. Rachit, my personal view, I think last 1 year may the clear favorite has been flexi cap. Uh, I would say that my new favorite is multi cap, because clearly, in case of small and mid caps, valuations have corrected slightly more than large caps, marginally, right? Because as Krishna talked about, FI का selling के वजह से large caps should have theoretically done better. But I would therefore like to solve that problem by saying multi cap. I think makes a lot of sense. तो उसमें तो small mid का 50% allocation तो आ ही जाता है. And I would Honestly, when I look at not just answering for Mahindra, across industry, small mid cap exposure via multi cap tends to be far better than small mid cap exposure over flexi cap, because अपना इंडस्ट्री का काफी सारी फेवरेट फंड्स जो है फ्लेक्सी कैप में, दे आर ऑल वेरी लार्ज. तो अगर आपका 30,000 या 50,000 करोड़ का फ्लेक्सी कैप फंड है, मैं क्वाइट ऑनेस्टली कभी भी लाइफ में उसके पास 30% से ज्यादा मिड कैप एंड स्मॉल कैप नहीं होगा. Right? So if you want to play the India story over 3 to 5 years, small mid cap has to be part of it. You
Hmm.
would play it via flexi cap or multi cap. My preference at this juncture is for multi cap, but I don't know, Krishna, what's your view?
No, I agree. If there's a relative choice, see that's the advantage of a multi-cap, because partly the fund manager is constrained with a minimum 25. So they will always try to find out the best space within that, rather than thinking relative valuation at every point of time. In a flexi cap, clearly relative valuation helps, but at the same time, in the constrained environment of mid and small minimum 25, it actually helps multi-cap far more.
Uh, Question from Jay. Why does no AMC follow Warren Buffett's style of portfolio management, put cash aside, and equity funds have options to go to 65 to 80%? Why are they not doing it? Jay, just to make this very, very clear, there are one or two fund houses that have made that decision. We are clear, we broadly run fully invested portfolios. Our belief is MFD stroke advisor and investor will make the appropriate cash calls they need to make. Every day we are investing money for 14 lakh investors. We are supposed that this is we are part of their equity exposure. If I second guess that customer by starting to do cash, and customer ने वैसे भी और भी cash कर दिया, it's like it's not the right thing to do. So when you invest with us, assume that if it's an equity fund, it will be primarily invest in equity. हाँ, अगर market में हमको कुछ दिखता है, there are times where you can take a call कि शायद 6 7 8% कैश आप रखेंगे. और फॉर एग्जाम्पल, टू गिव यू पर्सपेक्टिव, अभी काफी सारे जो बैलेंस्ड एडवांटेज मल्टी एसेट फंड्स, दे रन विद मॉडल्स. नाउ मॉडल्स आर सपोज टू टेक अवे ह्यूमन इमोशन, which is correct. But for example, war like situation is an exceptional situation. So even if our models are being run, I know that Krishna is using his experience and judgment to take a call कि अगर मॉडल कहती है कि 3% बढ़ाओ, perhaps that judgment is then put in play कि 3% नहीं 8%. Right? So those are the kind of things we will do. But it will not be extreme कि भाई suddenly 20% cash आप डाल दीजिए. Right? There is a question on there's actually one comment from Rajesh, and then there's a question from Jay again. What alpha should you expect from Mahindra Manulife in respect to Sensex or Nifty? And Rajesh, thank you so much for your that Mahindra has done really well in the last 6 months after a previous 6 months which was not so great. Thank you, but let me just explain. Uh, that's something you should expect from our fund house. अगर आपको लॉन्ग टर्म में परफॉर्मेंस डिलीवर करना है, अगर आपको लॉन्ग टर्म में अल्फा डिलीवर करना है, यू विल हैव टू स्टमक 3 to 6 months ऑफ अंडर परफॉर्मेंस. बिकॉज अगर हमको हर क्वार्टर में टॉप क्वार्टाइल में परफॉर्मेंस लानी है ना, तो मैं आपको जो भी एक्सप्लेन करूंगा कि मैं फंडामेंटल्स देखता हूं, मेरा फिलोसफी ऐसा है, रियलिटी ये है कि मैं मोमेंटम प्लेयर हूं. राइट? एंड मोमेंटम प्लेयर्स इवेंचुअली 50-50 प्रोबेबिलिटी है. तो यू विल सी फ्रॉम महिंद्रा मैन्युलाइफ नॉट जस्ट इन लास्ट 6 months, अगर आप पिछले 5 साल देखोगे, there have been at least 3 or 4 times where 6 month performance has been quartile 3, quartile 4. Important चीज ये है कि we introspect, we analyze and understand कि this is the reason, but we check again. If we are convinced that our rationale, our logic is strong, we sometimes hold, sometimes we do not hold. I also say पॉइंट इज जब 6 महीने की अच्छी परफॉर्मेंस है, इसका मतलब इसमें इंट्रोस्पेक्शन का जरूरत नहीं है. दैट इज ऑल्सो अनट्रू. So the need to keep introspecting, putting yourself under scrutiny for us is a constant exercise. And I can tell you one thing, that the question, Krishna and I, if at all we have a difference of opinion, not a difference of opinion, but it's so interesting every day. For me, it's about what is my today's 2 year and 3 year and 5 year performance looking like across the fund complex? Krishna's is how much alpha have I delivered, right? Because end of the day, the value add of a fund manager is मैंने कितना alpha दिया है, right?
Yeah.
We can't control. So to that extent, I can't give you a percentage कि इतना alpha generate हो ही जाएगा. But to assure you कि enough when you are giving money to a fund house जिसके पास एक भी passive fund नहीं है, इसका मतलब मेरे फंड्स को जस्टिफाई करने के लिए मुझे अल्फा दिखाना ही होगा. So to that extent, we will always be focused on that, right? Uh, Krishna, there is a question on, it's a lot of data. Thank you for that. Price and earning multiple and price to book. 30th March closing versus 23rd March closing index is also on the same level. I'm not sure what the question is supposed to be. Savita has asked a question, but before that, I'll come to you, Krishna. This is a separate question from an anonymous. Uh, Krishna, अभी हम भूल गए हैं, but 2.5 months ago, अपना market में IT sector में बहुत chaos हुआ था, right? Because there were a
Yes.
couple of announcements on AI, and obviously because rupee has become 94, तो थोड़ा सा वो IT has kind of done okay relatively, right? But generally speaking, as a group, any different views on IT going forward आपके हिसाब से because of the way AI is looking to play out?
Yeah, so on AI, say IT, what is the real worry in the market? The worry in the market is that because of AI tools being used by many corporates, can the IT industry's revenue, okay, can the IT industry's revenue come down because customer might decide to do their own maybe AI usage on their own, and that's a worry. Now, if that happens, we are of the opinion right now that two different variables. One is a lot of customers are going to require IT usage, AI training for themselves, and that's where IT companies can come in to support. So to an extent, it is not going to be a very a negative outcome for IT companies on that perspective. They will first have a customer acquisition, customer revenue model coming up because of IT implementation. That is one. Second, it's not only that these customers of IT companies are going to implement AI. The IT company themselves are doing a lot of repetitive work. They are doing a lot of work where past information can be used to improvise their own understanding and deliverables, which means IT companies can also gain a little bit of cost comfort from this AI uh, implementation at their own end. So that's one piece of AI. Second is the structural fear or the worry that if IT customers start using AI, what can happen now in our markets? We always have to balance between what may play out 3 and 5 year down the line versus what the valuation is, because in all fairness, in majority of the cases, these 3 and 5 year views have not played out in the same 3 and 5 year view. It might play out over longer or might just happen very fast. So that's a game for us. In absolute near term, what IT industry is going to benefit, because a lot of projects which were not possibly so profitable, stroke less profitable, might become far more profitable because what value you're realizing. So in a way, that's IT is another outcome of what the chart I showed about how rupee has depreciated over time and Nifty has still risen, which means at various points of time, forex earning companies take leadership. Possibly forex, users take leadership depending on the rupee moves. So broad pieces, yes, IT, that debate is pretty much strongly on about the need for IT service providers can come down because of automation and artificial intelligence. The flip side is really this, and yeah, from our end, the thought process clearly is, there will be times when one wants to be overweight IT to take benefit of some of these advantages, and at some time, try to figure out what's in the price or what's the valuation uh, metric would like to apply to take a portfolio action.
Okay. मोता कंसल्टेंसी व्यू ऑन मेटल्स गोल्ड एंड सिल्वर. या सो कृष्णा ने रेफर किया था कि देयर इज दिस इंटरव्यू ऑफ स्टैनली ड्रकनमिलर दैट सजेस्ट दैट maybe the time to be a little more positive, but obviously that's the view of one person. एज अ हाउस राइट नाउ हमारा व्यू ऑन गोल्ड सिल्वर न्यूट्रल है. Not necessarily a time to be buying because of the fall, neither a time to be necessarily overselling. So honestly, gold silver is not going to be an asset class that will either underperform or outperform other asset classes, at least in the next 3 to 6 months. uh, at least there is no signals to suggest that. हो भी सकता है, but there is nothing that I can tell you ये इसके कारण या इसके कारण गोल्ड सिल्वर आपको लेना चाहिए या गोल्ड सिल्वर आपको रिडीम करना चाहिए. मेरे हिसाब से काफी न्यूट्रल है, राइट. There is a specific question on focused, but I'll just before that, uh, as a fund house, can you help us with how it is bifurcated between growth, quality, and value? When and what has worked for focus, business cycle, and value fund? Simple answer in lighter win Krishna Sangvi, because he manages all three. But no, on a more see, essentially as a fund house, we are growth investors, but within our investment framework of GCMV, we pay careful attention to valuation. And you could argue that valuation is slightly different from value, but it is not hugely different, right? So we will not buy growth stocks at any price, okay? But at the same time, we will not buy stocks because they have become much cheaper if those stocks inherently do not have are businesses that will have growth potential in them. The word I will not use, and this I know there are some fund houses that talk about this as if quality is not should not be brought into a debate between growth and value. Growth and value styles are the two styles at the top of the house. Quality, frankly, if you ask me, is an explanation when you don't perform, right? As an individual person, to start sitting in judgment कि ये कंपनी का क्वालिटी बेकार है या कंपनी का क्वालिटी बहुत सही है. क्वालिटी हमारे हिसाब से एक ही चीज में बनता है, पैसा बनेगा ये स्टॉक के होल्डिंग से लॉन्ग टर्म है तो क्वालिटी स्टॉक था, नहीं बनता है तो क्वालिटी स्टॉक नहीं है, right? So there is an element of quality that we look for in management quality. That's the word we use, management quality. But we don't, मतलब this कि quality, momentum, etc. etc. ये होती रहती है. A company that you would have thought is very high quality 2 years ago, but शायद स्टॉक प्राइस की परफॉर्मेंस के हिसाब से 2 साल के बाद आपको लगेगा कि बॉस इसमें जेन्युइनली क्वालिटी था या नहीं था, पता नहीं है. एंड सिमिलरली यू वुड से ये कंपनी का क्वालिटी इतने खास नहीं हो रहे, बट दैट मैनेजमेंट इज डूइंग अ लॉट ऑफ हार्ड वर्क. After 3 years, that company may be one of the most outstanding companies in terms of the way they have delivered their results. So we don't, I don't think we color our lens through quality. Uh, in terms of focus, business cycle, and value, and there's a question from Harsh. कृष्णा, फोकस्ड में आपके 44% एलोकेशन है टू फाइनेंशियल्स, एंड आपका लार्ज कैप ऑलमोस्ट 90% हो गया है. सो डू यू स्टिल रिटेन दैट कॉल और यू एक्टिवली रिकंसिडरिंग चेंजेस इन पोर्टफोलियो?
No, I think look, some error in the basic, this 44%. I don't remember in last five and a half years
नहीं है,
of this
करेक्ट.
fund ever gone to that number. So it should be more like 30% odd rather than 44. So that actually might bring down the question about rate sensitive in this crude environment and rupee environment. So to that extent, might just need review. But otherwise, very broadly, see, large cap buyers is maybe 86%, as if I remember correctly, as of February portfolio. Around 86% is large cap, and I think broadly the idea is that whether it's large or mid, sometimes the valuation comfort might make me as a fund manager look at slightly more on large cap. At the same time, there are some businesses where you may not have too much of option to buy mid and small. So I'll go more with the thought process that large cap is an outcome of how I look at valuations and relative earning growth opportunity. But yeah, a very underlying thought for me has been that in an Indian segment, mid caps are conceptually getting into a premium valuation zone. Now, there are two ways to look at this entire argument. One way to look at is that uh, why the valuation is at a premium, because partly the earning growth is good, And if the earning growth is good, can I capture some other large cap where the earning growth in next 12 months, 18 months can be equally good? Now, if I'm able to capture some of those investment options, then the kind of money you can make on re-rating in large cap can more or less compensate or offset the higher valuation of a mid cap. So that's how I look at it. So little bit valuation conscious can be a word. Otherwise, see, India's economy is growth. I mean, whether we call it steel or power sector or consumption or automobiles or financials, almost every sector there is growth. So there's no that way reason to be a value investor. But yeah, the relative opportunity, the advantage of a value style can only be there is a potential to make little bit more money because of re-rating of a company, which can happen with the earning growth rate suddenly picks up. So for us, the belief really is that whether it's large or mid, especially in let's say focus kind of situation where fund has its own challenge or a constraint of 30 companies only at any point of time. So the relative stock picking possibly focuses slightly more on their earning growth capability in the near term, or some sort of a catalyst from a management action which can come to support uh, some nice re-rating potential.
Yeah, I'm just going to take Karthik's question. How swift would be the recovery in markets when the war ends? And where would the recovery be? Large, mid, small? Karthik, just quick answers. The recovery will be swift. There is no doubt about it. Just remember, there is this cliche, right? Buy on rumors, sell on news. That's the way markets behave, right? You buy on expectations a company will do well. Very often, sometimes when the company actually reports good results, I wouldn't use the word sold, but that's like the story is confirmed. In a negative scenario, is the reverse. Sell on rumors, buy on actual fact, right? So today markets are selling because there are rumors that war will continue for longer, oil prices will remain longer for a period of time, inflation will go up, macro will get affected, etc. And let's say suddenly one day, it could be tomorrow, it can be 2 months from now, the war ends, markets will take a very sharp recovery. ऐसा नहीं है कि market will go up by 2% every day for that next week, right? So that's our expectation, and so never look to time it beyond a point. Where would the recovery be? Large, mid, small? Krishna, correct me if I'm wrong. My experience teaches me कि जब कोई बड़ा इवेंट के हिसाब से मार्केट का रिएक्शन है ना, तो रिकवरी सब में होता है.
Yeah.
सिमिलरली जब जब मार्केट का बहुत सिग्निफिकेंट इमीडिएट नियर जर्क रिएक्शन भी होता है ना, तो सब गिरता है. अच्छा स्टॉक, बुरा स्टॉक, लार्ज कैप स्टॉक, स्मॉल कैप स्टॉक, सब गिरता है. देन ओवर अ पीरियड ऑफ 1-2 months मार्केट बिकम्स मोर रैशनल एंड इट स्टार्ट्स टू चूज कि बॉस ये कंपनी एक्चुअली अच्छा है, इसको गिरना नहीं चाहिए था इतना, एंड दैट काइंड ऑफ थिंग. बट when you're talking about
Especially
a
when it's a
very
macro
short term,
event.
yeah, when it's a macro big event, everything that will happen together, which is also why we had talked about multi and flexi cap as perhaps a better choice to kind of make. But if you're a genuinely long term 5 year investor, I think small mid caps deserve definitely a lot more attention now. There is a question also on aggressive hybrid. And I just wanted to from Suraj, right? And listen, we've been saying this for a while, that is the contradiction. See, today war has happened for last 1 month, but the reality is investors have generally not seen returns for last probably 15 months, right? uh, and people have been like little not very keen to invest or at the sidelines. And I have never understood why. अगर आपको थोड़ा सा रिस्क लगता है लेकिन आपको लॉन्ग टर्म में ठीक लगता है, तो ठीक है, इक्विटी में मत कीजिए ना, हाइब्रिड में कीजिए. You are effectively participating, but perhaps at least thoda bahut you are not participating as much. So I continue to believe that aggressive hybrid should be a primary fund for distributors to recommend to clients at times like this. Uh, and only comment I would make, and this is a bit of a thoda cheap shot, recommend aggressive hybrid fund of a fund house for whom aggressive hybrid is an important fund. Okay, because in many cases क्या होता है, हाइब्रिड फंड्स आर द फंड्स वेयर जो मेन फंड सब इक्विटी फंड है, अग्रेसिव हाइब्रिड बैलेंस एडवांटेज आपने किसी जूनियर को दे दिया, I am happy to report that in our case, one of our senior most PMs, Fatima, has been running hybrid, aggressive hybrid from the day she has joined. So it's a very important fund for us because हमें लगता है कि it has a very clear role to play in any investor's portfolio. So just like Flexi Multi, for slightly more reluctant investors, I think aggressive hybrid and multi asset make a lot of sense. Somebody did make a comment कि balanced advantage funds have not really done that well in the last 1 2 months. Yes, that's correct, but honestly 1 2 months may not be the right time frame to judge anything by, right? Because क्या हुआ है last 1 month में everything has fallen. There's also a question कि pharma sector गिरी है. Yes, it गिरी है, but it has not fallen more than the markets.
Yeah.
In fact, we think healthcare is potentially one sector where it has a bit of a margin of safety at this point. But in the last 1 month, it is more a function of there is a war. It is creating a lot more disruption and destruction than was originally thought. This is not like Russia Ukraine war. And there is also a very, I mean, this may, Krishna may agree, disagree, but I'll just give you a flavor. I mean, last week I was in a Manulife Asia conference, right? जो हांगकांग सिंगापुर बॉस्टन या न्यूयॉर्क में बैठा है ना, their view of this war, if you ask me, somewhat थोड़ा सा academic है. बट हमारा जैसा इंडिया में, while we may be finance professionals, बट वो एलपीजी का जो things are happening on cylinders is a practical thing one is seeing, right? Everybody in India has relatives in Middle East, uh, right? So it's a war which is much closer to home than it is for somebody sitting in Hong Kong, Singapore, or New York or London. And to that extent, perhaps our reactions will be a lot sharper. And that is just a perspective that I wanted to put. Uh, Sanjeev, while we are pleased with the current performance, I believe incorporating regular offline interactions would further strengthen our confidence in the fund house. Periodic face to face discussions would allow for deeper technical. I take the point, Sanjeev, but see, the perspective is this. Uh, Ever since we started this practice 3 years ago, I do not think there's a single call that Krishna, myself, and today Rahul is not there, have not made ourselves available. The advantage of that is that I get to talk to 300, 400 people and share our views, and so does Krishna. It's one on one. Offline mein kya hoga? At best, I'll meet 30 people. So we have to make that choice, and our choice at especially difficult times like this is maximum coverage is perhaps possible through online, but we are very clear our offline interaction levels will definitely increase. I'm not sure which city you are in currently, but I'm sure there'll be an opportunity to meet in person. By when the application will upgrade, I don't know what that question. Ankit, you've asked a question on HDFC Bank. Honestly, we would not be able to comment on stock specific. We will take whatever views we have to take in terms of portfolio action. Uh, I'll take a last question because again we are longer, but I also said we should have this time for Q&A. Which funds other than Mahindra Multicap and Flexicap that you express can we think about? See, frankly, Savita, one thing I'm very proud of is in Mahindra, and in fact, I have a podcast which is probably released yesterday. मेरे हिसाब से our responsibility is to make sure every fund we run to the best of the ability for best outcome. तो चाहे वो वैल्यू फंड हो, बिजनेस साइकिल हो, इनोवेशन फंड जो रिसेंटली लॉन्च हुआ है. सो बेसिकली माय आर्ग्यूमेंट फॉर डिस्ट्रीब्यूटर इज महिंद्रा के साथ आपका एक कॉन्फिडेंस होना चाहिए कि आपने अगर क्लाइंट की रिक्वायरमेंट के हिसाब से आपने कुछ फंड कैटेगरी की चॉइस किया है. आई एम वेरी श्योर महिंद्रा मैन्युलाइफ विल प्रोवाइड एन अबव एवरेज एक्सपीरियंस इन दैट फंड. हमारा ऐसा कोई फंड्स में कोई स्टार्स नहीं है, कोई मतलब नॉन स्टार्स भी नहीं है. सो आई डोंट वांट टू कॉल आउट स्पेसिफिक नेम्स, बट आई विल स्टिल अगेन कॉल आउट कि जैसा फ्लक्सी एंड मल्टी बिकम थोड़ा सा जेनेरिक आंसर्स बिकॉज दे सॉल्व फॉर अ लॉट ऑफ थिंग्स. Similarly, for clients who are still not convinced that this is the time to invest, lump sum, etc., I would recommend aggressive hybrid and multi asset. Multi asset, like I've spoken on many town halls before, शुड बी द नंबर वन फंड. अगर एक ही फंड आपका ओन करना है महिंद्रा में, मल्टी एसेट ओन कीजिए पहले, because that should be the best of Mahindra Manulife in one fund, that is multi asset. Okay, I think that's it. We have some more, but in the interest of time, it's 5:20 already. So uh, I will I will call it a day, Krishna, because again, what I can request is that for all of you who thought this session was useful, etc. अगर आपको लगे कि ये मार्केट की सिनारियो में, right, it will be good if we don't necessarily do it after 1 month, but शायद middle of the month हम वापस catch up करें, where we don't have to have a presentation, right? We could just have Krishna and Rahul sharing their views on market, and then a Q&A. We are very happy to do it.
Yeah.
Please give your feedback to your RMs and they can communicate it to us. These times, I repeat, these are the times we have to hold the hands of our investors and be connected. Therefore, for us to be connected to you far more regularly than otherwise, we are happy to do. I'm sure Krishna will also make himself available. So please let us know. Agar aapko you don't want to see us only at the end of April, and you'd like a conversation somewhere in the middle of the month, very happy to do so as well. Yeah. Thank you very much. And like I started, all the best for FY27. I will only tell you 30 years I've been in this industry. Any year which starts with like, "Arey yaar, ye saal kaisa lagega," it's things are looking, it has always ended well. It's the rule of life. जब आपको लगता है मंदी है, मंदी नहीं होती है. जब आपको लगती है कि तेजी है, तेजी नहीं होती है. So with that kind of lighter vein comment, but also serious comment, let's look forward to a year of optimism. I wish you a lot of good luck with your business, and most importantly to all our investors that we are basically here to serve. Thank you.
Thank you. Thanks.